The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. It's my pleasure to be here Monday through Friday on market day. So I'm going to be here on Monday and 11 o'clock till noon. Don't forget, today being Friday, you've got a great show coming up after me. And, you've got health, you've got wealth, you've got just so many things here at TFNN. Starting off at 8 o'clock, John Logan kicks us off. And all I can say is, if you want information relevant both to your health and to the markets, this is the place to be. So let's go straight to there. And thank you to Steve Rhodes and John and Tom. And we've got Daryl Martin. Sorry about that. And leading up right into this show. So we've got the Dow down 12. This is going to be a fascinating session because the S&P's up 2.5. And I have my Chapman Wave indicator flashing from yesterday, the short-term trading index indicator. I call it the Chapman Wave Trend Gauge. And it did, in a sense, give the pre-market futures up 7 to 9 points. There's actually much more from yesterday's low when it flashed. But it's the action during the day that really counts. And it has until Tuesday. This particular indicator has until Tuesday to really see the market kick in. Can't really call it. Although the futures earlier on were up 4 to 5 points, it's usually up 7 points to 8 points. 7 to 9 points in the futures. The cash index normally would have at least a 5 to 6 point lead in, usually going even higher. So the selling, I think, had something to do. Cameron came on from Britain talking about ISIS, and I think in a sense that's kind of what put a damper on things. I'm looking at a market holding really well at this particular point. We'll go into all the details. Now, I had questions over the past couple of days, especially since when I gave my talk on Wednesday night over at the Boston Investors Group. I was asked, does the Chapman Wave work does it work in all time frames, all different indices, whatever tradable you're looking at? And my answer is yes. Does it work perfectly? Well, it works darn well. Do we interpret it always perfectly? No, because our human element comes into it. But on a purely practical level, what you look for is the lowest, most obvious low bar, and then you look for at least, hold on, at least 4 higher peaks. Well, this is a 2-minute chart of the volatility index, the VIX index, CBOE volatility index. And it makes a low at 9:46 this morning, today's the 29th, at 11.78. And all you do is you count each successively higher peak, and it goes straight up. This is called the floating ladder. As soon as it confirms that there's a trough, that is the low bar on the right is higher than that one on the left, that makes a V-shaped bottom. So now you go leg A, that's leg A. If you're looking at Tiger TV, that's leg A. The very next bar, after it makes 12 as a high, has a high of 11.97. 1 penny makes the difference, even if you were looking at the New York Stock Exchange or something at 13,123.10. If it goes to 0.09, that becomes a peak. If it goes to 0.11, that continues the leg up. And in this case, it makes a peak A. Then it goes on and it goes to leg B, and then trough B, because the next high below the 1210 high of 958 is a lower high. And lo and behold, when you take out that high by 1 penny, you start the new leg up. The new leg is a parallel leg. It goes 12.22 at 10.02, and at 12.04 it goes 12.22, and plop, 12.21 at 12.06. And then it does that for 2 bars, and it takes it out, goes to leg D. Leg D stops at 12. 0.37 at 10:14 this morning, Eastern Time. And that was your peak D, because what you did is you made trough A, a lower trough B, a lower trough C, and you're now in leg D to the downside, trough D, because you've already made a higher high bar, a higher low bar right there. From 11:06, the low was 12:15, and then you go to 12:16 as the low at 11:08. And it's trying to form some kind of a base. If it fails, because the MACD is still quite negative, that'll help the market. And where did the market turn? Let's just go, we'll take the DIA. Dow Diamonds goes from the low bar of 170.25 at 10:32, it goes peak A, B, C, and D. So you get the inverse, like a mirror image. And now it's pulling back, but the MACD is holding well, and the stochastic is holding at 81%. We could see some higher prices. I thought I'd just do that a little extra. Today's Technical Friday. Why not do a little technical stuff? I've never done this one before in the 2-minute chart here. I do it all the time for myself. So that's that. Now, what did we expect? We expected that the E-mini would make its leg D to the upside. And what do I mean by that? I mean that from the low bar that was made at 1890.25 on the 8th of August, it went to peak A on the 11th at 1941, pulls back with a slightly lower high at 1938.75, goes in 25-cent increments. For those of you who trade it, you know well. And then what does it do? It goes all the way up to 1992.00 on the 21st of August at 17:15, 5:15 in the afternoon. Pulls back a tad, 1992.00, 1991.50, makes a peak, and then it goes to C. And it hung around there. Instead of the one-day consolidation, it took 2 days, this is the third day, to break 2002.75 at peak C. If you're looking at Tiger TV, this one here on the left is the daily, and there is the candle that is right now making leg D at 2003.75, trading at 1997.75, up 1, after being down earlier this morning at 1987.50. Isn't that yesterday? And then this morning, the low was 1992.25 on the September contract. Now, this is the question. It went to a peak G at 2002.75 in the 120-minute chart. What the heck is this? This can't be an H. There is no H. And not only that, it has to be a brand new buy mode, because it didn't take out 1981.50, which would have been the potential start, but it actually is much lower than that. So what we're looking at here, yep, maybe that's a C. This is the D. I think that this, in fact, is peak C, and that we will go above 2003.75 for leg D. And I wouldn't be surprised, I don't know if it'll be today, but certainly by Sunday night into Sunday night where you trade overseas, by Monday or Tuesday, we should be looking at 2004 plus for leg D up. Might have gone up and then turned down again. But anyway, that's the way I use these particular techniques. So for my subscribers to my opening call, that's my daily newsletter with very comprehensive look at the markets. For instance, this is what I gave for today. I said there's a peak E sell-off from 17,153 in this little quintile over there, and we pull back all the way to 17,018. We never went to the 16,000s. At 11:30 on the 28th yesterday, and we've basically gone sideways. Nice consolidation. The index that we look at for the volatility, the 120-minute chart, went in fact to, this is very interesting, 11:30, 11:24. So they cannot be. So this is A, B, C. Something's going on here. Excuse me for a minute. Yeah, I didn't do that correctly. That's A, and that's B. I thought that was wrong. So that's B right there. And we're looking at, just want to double check. Yes. So in the 120-minute chart of the VIX index, we haven't been able to go above the high of 12.73 that was made at 11:30 yesterday morning. And that, in a sense, is a positive, number one. And number two, here's my short-term trading index. It hit 2.18 yesterday. That's a high number. And in my methodology, it says that within 1 to 2 sessions, there should be, starting off in the E-minis, the S&P E-minis, a move that takes you 7 to 9 points higher, which should be reflected and handed over to the cash indexes. Well, today we saw the S&P, which closed yesterday at 2024. Oh, no, is that today? That's today. Yesterday's candle. Yesterday's candle closed at 1996.74, and today's high is 2001. So that's about 7 points. But I think it's still active. In other words, this particular index that I indicated, this tool that I developed, is still active right now, and we've got until Monday. But in fact, there's a holiday Monday, so that'll be Tuesday. Good. Let's go to Scott in Safety Harbor, Florida. Scott, how are you?
Great. I'm sure you remember after we spoke about Apple, about 10 or 15 minutes later, I went ahead and snapped a couple hundred shares at that time just to start wedging in, and boom, it went right up. So
let me just show the folks. Let's just recap now, because I use this as an example of the Chapman wave. With no notation whatsoever, with no technical tools whatsoever. I did happen while I was talking to you, if you remember, we were talking at, it was 11:10 or 11:15 maybe, on the 27th, whatever day that was, that's 3 days ago,
right.
Wednesday, I believe, and we were looking, and you had called to discuss Apple, and we were about to go to a break, and I just finished doing work on my Chapman wave methodology, and I had an arch formation base being hit in Apple, and that base had 100.86 as a low at 10 minutes to 10 on the 26th, and then this is a 10-minute chart, and then retesting it and breaking down and going to 100.70, but starting to produce some really good technical indicators on the chart without MACD, 9-period moving average, stochastic, nothing. And I said to you, as we went to a break, that was the first break, and I said, oh my goodness, right here at 101, I think it was 101.14. You said to me, what should I say? Right now you should be buying it. And when we got back, I said, yes. Why? Because it broke above, in the Chapman wave, if you look for the lowest, most obvious low bar, in this case it was 100.70 at 9:50 on the 27th. It retested it successfully for a peak A, and then it went to a B. And what I had drawn in, just to show as a demonstration how two simple lines can, or even one line, could be so important. There was a diagonal line from the peak D top in the 10-minute chart back at 10:10, 10 minutes to 10 on the 25th, and all those lower highs were being pierced, and bam, it took it out, and it went to a peak A, B, C, and a D. I'll be right back with Scott. We'll be talking about Apple in a moment. Hold on, we'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. If you're looking at the charts, the Tiger TV, you will see right here that I've got the 10-minute chart, and this is I'm going to put it in here because it's actually very notable. This is exactly when we went to a break. Scott had called. He was discussing Apple, and we did the analysis, and he did hop in, and he did very well. And it went to a peak. E pulls back very sharply, trough A, trough B, trough C, trough D, goes down to 101.56. Now it's gone A, B, C, alternate count FC, but it didn't make a D, and I think right now it's having a little bit of a rest. And it's going to be very important, and we'll discuss a few things right now. Scott? So,
considering all the big boys are already gone for the weekend right now, I think Apple's doing tremendously well. But, we also have spoken about BAC, and I think BAC is an exact reflection of the true market. Apple isn't really a reflection of anything. It's an entity unto itself. Like when people say, well, they ask me all the time, what one stock would you just buy and put in the oven? And I say Google or Apple because they're just almost a life form out there. But BAC, I think, is a true reflection, the way it pulled back, and we had spoken about that too, and it did exactly what you said. It hit the 1650, and there was a little a war zone there, and it pulled back and retreated. Now it went back to 1599, actually, this morning.
So, now let's just look at this. Folks, we're looking at Bank of America. I've got that same 10-minute chart, what I call the naked chart. See the little doji right here? Well, all you need to do is the same pattern that we were looking at in Apple up until then. But there's a little bit of a difference, and I'll explain why. You see that arch formation goes from the left side to the right side, breaks down, goes underneath, but doesn't close below the $16 low, that round number low that was made at 10 to 11 on the 28th yesterday. It goes peak A, peak B, breaks under it, so that's an A to a B minus because it went to a lower low, so it negates the buy signal, goes A, and then it goes B. So while I'm doing this, let me just ask you, Scott, do you have any position at all in BAC right now?
No, what I'm really considering is a re-entry point there. But I'll tell you the truth, I don't know where you're at for next week, but I'm kind of thinking a lot of the big traders made a bunch of money this week, and they're going to be a little bit hungover Monday, Tuesday. I think next week's going to be a slow down week.
I'm still waiting for my legs on the upside for the Dow and the S&P. The E-minis have just done it, but that's not good enough. I want it in the cash index. I'll do that in a moment. But let me just explain something. Bank of America right now at 1608 is making its second arch formation. It says that this particular arch, because on the right side so far it hasn't broken below the 16 round number low or the 15.99 low that was made at 3:20 yesterday afternoon.
Yeah, I think it's holding its identity as a $16 stock, as I like to call it.
Yeah, but this is the interesting thing. It's trying now to go for the high of 16.09, but it turns out that 16.10 was the gap low at 20 to 10 on the 28th of August from the close the day before at 4 o'clock of 16.19. So this gap
not only becomes... what was it? One thing. I think it was like 6 weeks ago, 1608, 1610 is when actually it started falling back and fell back for a month and a half after it tested that.
Right. So that makes this gap here really important for two reasons.
One is after that.
Let me just finish this thought. Okay. One is because Bank of America has got all that stuff behind it. That's no guarantee that going ahead it's going to make a lot of money. It's just that the fines and all everything that goes with the baggage that it had is kind of set aside for many fund managers. So it's kind of in play. But this resistance level that I'm going to draw in here, that's going to be the big thing, because if Bank of America next week at any point starts to trade at 16.25 or higher, then there's a really good chance that it's going to go to leg D. My suspicion is that right now Bank of America is a buy on a short-term trade, and that you could put a really tight stop of 20 cents or so. Why? Because I suspect that by next week, Wednesday or Thursday, it will have broken above 1646 to give you a leg D up in the daily. I'm completely
wrong. I agree with you, except for the stop. I would.
Let me just finish, because I need to finish the thought so that I have both sides of the coin. 15.86 closing below 15.86. And I have to say, whoops, I think I'm wrong. Now, I just want to also show that in the Chapman wave, we look for at least peak Ds. There's a peak D in the 120-minute chart that went at 11:30 on the 19th. It pulls back to the 9-period moving average, starts another buy signal, and that buy signal goes peak A, B, C. Whoops, I forgot to put in. There's your D. And where does the deepest turn down? Folks, I'm going to be teaching the course on the Chapman wave very soon. We'll have an announcement next week. But most importantly, what you're looking at is these D's are just...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Scott in Florida, and we're looking at the Dow now up 240. S&P's up 435. You can't fight these things. The trend is the trend, and trends don't just change on a dime or by ISIS. They change when, in fact, many of the technical factors are deteriorating. And right now, I just don't see that deterioration. I even see the XLF, which we are long, in fact, for my subscribers, looking very good. It's going to that legacy above 2344. And as we're speaking, Scott, you see that the 10-minute chart that I've got here has Bank of America making the second arch, and it's just attempting to break above 1610. That's very important. If it closes above 1612, then this whole gap area becomes a viable entity. And I can just tell you that Dow's up 12, S&P's up 5. So I like this. I think, as I remember, I was saying just a moment ago at about 16.09 or 1608. Actually, no, it pulled back to 1607. That I did think that Bank of America was for a trade looking good, and now it's at 1611. It's just broken out. So, but you're not in Bank of America right at the moment, right? Is Scott there?
At 16, but I didn't, and I should have flipped the switch this morning, but I didn't. So I lost the 10 cents today. So.
Okay, hey, it's not a big deal. I mean, this is part of the whole thing.
But
There's no guarantee that this is not going to pull back very quickly. But right now it's a 16.
I don't think it will, though, Basil, because I think that the favorite and all the eyes right now are on technology and Apple. I think next week the guys might think, okay, you know how Wall Street is. They're very fickle. And next week it'll be their darling. The Bank of America will be back in vogue again. I call it the stock du jour. And it's just not today. It's not anybody's favorite today, but it might be next week or the week after. Hey, now's the time with everything cleared out. Let's get back into Bank America.
Well, that's what I think that they are believing, because it's one of the least expensive price-wise. I'm not talking about the fundamentals. I'm just talking about the actual price. Being at $16 is not WFC, Wells Fargo, trading at 51, or JP Morgan trading with all the attacks going on. You would think that the bank stocks would have been knocked down. Instead, look at this. JP Morgan's acting very well. I like the XLF very much. I think that it has the potential to go to and I drew this in for subscribers this morning. I think I sent it out. The subscribers to show that the weekly chart is in leg E. Maybe I'll have to alternate it and call it news /
I think you agree with me on the fact of the world news too. I think right now we're the big, strong guy in the room, and there's a lot of fights going on around us, but we're sitting there just having a cocktail, eating dinner. And I think all that's been digested. I think almost anything could happen now, knock on wood. Almost anything could happen now, and it makes no difference to us, our stock market. None.
Right. So, you know what? I think that you've hit exactly the right tone, especially for this long weekend coming up. This is the time to relax, folks, and enjoy the weekend, the long weekend. But in the meantime, back at the ranch, as I say, I do like this action in Bank of America. It's just popped a little higher to 16.12. I think it's good, and I do think it's going to help the overall banking sector. So thank you very much for bringing it to my attention.
And everybody at TFNN, have a great weekend. And everybody listening, stocks and money make no difference. Your health is absolutely everything.
You know what? I couldn't concur more. Absolutely. Thanks so much, Scott. Have a wonderful weekend, and we'll speak to you maybe next week.
Yes, sir. Bye-bye.
Thank you. So, folks, let's just do this. Now it gives me a chance to do the numbers. The Dow, this is the 29th, the last trading day of the month of August. Now, what's really important, if the Dow doesn't go to 17,154, it has made a very modest peak in the monthly chart. I have a whole bunch of things that I'll be giving to my subscribers come next week, if that's the case, because there are implications when you make a D or an E with just a nominal little V-shaped top, and then you break to a new recovery high. There are a bunch of things that go on. So let's do this. Let me run the numbers, and then the questions that I've got that I'd like to answer. And the Dow's up 15 at 17,094. S&P's up 5.5 at 2,002. The comp index is up 20 at 45.78. You've got gold. Now, I'm going to do this. I can't resist. We've been discussing here, both in the Dan and John Logan and others, about the silver chart. And what I had said was, and I have no idea whether I was agreeing or disagreeing with anything that was said. I do know that on a short-term basis yesterday, they were looking for, the previous day, they were looking for a pop-up, and it really popped up very well. That was silver, and that was a great call. But I was looking at something a little differently. And what I said is the silver contract, this is the December contract. I used the September contract, not December. So let me just do that for now. SIZ14. Now look at this. SIZ14. It made a 1935. No, this is still the Z contract. I don't mind. So it made a 1935 low at 4 o'clock on the 21st of August. It makes a rounded top, an arch formation, goes to peak C1, peak C2. Comes back down, tests 19.36, 1.01 higher. bounces around, goes down to 1937. Meantime, it's making an A, B, C, and it goes to a D. The D pulls back sharply. I forgot to put the arrow. And it pulls back. And what does it do? It tests 1936. You've got 19.355, 19.360, 19.370, 19.360. Now, if you want to see something fascinating, look at this. SIU 14. That one went to 19.285, 19.285, 19.295, 19.285. That was even more perfect. And what that said is that there should be a bounce because it was a successful test without a close under 19.285, and it should go higher than that peak right there at 10 o'clock on the 26th of 19.66. What does it do? Silver screams right up, goes right through the 200 period moving average at 19.7T, and it goes to E at 1985, and then it plummets down in the pattern that I call the single leg A, go whoop, straight up like the Eiffel Tower, and now it's pulling back. And I wanted to just say, if you put this together with GCZ14, this is the gold contract. Look how I drew this in yesterday. I don't remember if I showed it, but I think I did. So you've got the up channel slightly moving up. It's, say, call it a 20-degree, 18-degree angle to the upside. Where's my protractor? My protractor here, I can't lean too far forward. Right, here's my, no, it's not. So what happens is there's a strong, gentle, rising trend line, but then there's also a resistance line. So you've got an up channel within the arch formations. And what does it do? The price goes in gold. It goes right to the 200 period moving average December gold. It goes right from 1,273.40 to 1,297.60 at 10 o'clock on the 28th. That's what I was talking about yesterday. I said, I still see gold coming down. I had a big thing about this at the talk I gave the other night, at the birthday party there for the Boston Investors Group. And what did we do? I showed this chart, and I showed there's now a down channel. And that down channel says what's really important about gold is it needs to break and hold above 1,300. That'll be very positive. But if it goes back down and it takes out this 120-minute support of 1280, it's only $9 or $10 below, that's going to say, be careful. Gold is not ready for a bigger move. It also doesn't say it's ready for a huge move to the downside, but it does say that two things are happening. If I show you the weekly chart, look at this symmetric triangle with the resistance levels in the weekly chart from the back of the high of August of 2013, exactly a year ago. And look at the rising trend line from the week of the 3rd of January at 1185, and you've got this support that's going to be really important. If I draw in my Chapman Wave inside track key support level, right here is where there should be a buy signal, and that'll only occur if I get confirmation and it goes above 1304 in the weekly chart, at least a short-term buy up to the trend line resistance. But if it breaks down, it says, red line, be very careful. Let me see. Steve Rhodes added something. Basil, weekly continuous contract for silver made a trough G. The week ended 628. So let's have a look at that. Yes, thank you, Steve. Let me have a look. You might be right. I remember at the time when I was doing this, I did this A, B, C, D, E. Yeah, it's an F/B and a G/C. Absolutely correct. I remember I had to redo the chart, and I did it visually, and then I just added ABC over here. But that B is actually F/B, and this G is G/C. So that usually says at G, you very often get a pretty nice bounce. Well, we went to an A, and it'll become an A- if silver takes out, and back to silver, the 18.735. So, but this is the pattern that really intrigues me, and this is what I've discussed, because someone brought up this thing that they had some people in Switzerland, I don't know where it was, somewhere overseas, they have this newsletter, and he had bought it, and he got into gold in June, July, and he had a 35% move up in the stocks that he had chosen. I said, hey, gold stocks and gold can sometimes gold can act beautifully. And you remember there was a period where gold stocks did nothing. Then there's a period now that gold stocks are acting well. Gold is not really doing anything. And I'd drawn in this pattern a year ago to say that in the Chapman wave methodology, in my CD introducing the Chapman wave methodology, I talk a lot about the H pattern that can go to a continuous lowercase m pattern, lowercase h to lowercase m. And that was drawn in ages ago. I didn't know that a year later, we'd still be looking at exactly in the middle of this range. I don't see gold, unless something happens overseas to do with gold becoming a currency of fear. I just don't see gold doing anything. The numbers to watch, gold, the GLD needs to break above, close above 129.21. I had said it has to really close above 132 to 134, that incredible resistance at the 200-period moving average, just maybe a fraction above it and just below it. That's going to be the big test. If gold snaps through that, we've got something going on. And that dollar, which is acting so beautifully right now, look, doji candle being formed at leg C. I wouldn't be surprised if next week we start to see some choppy action, but at least I'm thinking we're going to go to actually, this is a good time to do it right now. I'm going to go big picture. Dollar right now acting really well, high-level consolidation right there to peak D. I'm drawing in straight away. I see a doji candle and then a choppy up-down move. I draw in my oval pattern, and I've got myself Chapman wave, another stalk leg formation. This is the neck. This is an extension. There's the body, there's the neck. Wow, this is very interesting. It breaks down immediately if the dollar, by Thursday of next week, if the dollar closes underneath 82, I'm going to say 81.80 on the index. If it closes under 81.80, that's the beak, and the beak says it's going down to 81.72 or a little bit lower. That's going to be the big test. That means that the euro, EUR USD, right now, correctly, EUR USD, that the euro is trying to form a base, and it's gone to G/C, and I don't see anything in the euro to show strength at this particular point. All right? So that's that. And the weekly chart of the euro, it says you could have an inside week, but the chances are we're going to test 1.310, and it's trading at 1.315 right now. So euro is not looking all that good. So something's going to happen in the dollar to really change the atmosphere and the trend of the dollar. Now let's do the indexes. It'll give us a little time. In fact, we'll do that right into the break. It's a long weekend coming up. Maybe you can review it. You'll look at these particular things. Now we took, I had no choice. I put in stops on the long, 300% long position we had on the Dow. I probably shouldn't have done that. I did have a stop on one half for a profit, and on the other half, I wanted to lock in a profit. I just didn't think I wanted to have any risk at this particular point over the weekend. If I was wrong, that's all. I could have put a stop in a little bit lower and we'd still be in it, and I'd still be expecting a break above, in the Dow, above 17,153.80 for leg D. As I said, just for those of you who are not used to my methodology, this is what I'm talking about. Whoops, ESU 14. That leg above 2002.75 in the E-mini makes leg D. I'm expecting the S&P and the Dow to do the same thing. S&P is almost there. The high is 2005.04. I'm expecting 2005.05. If it's not today, it'll be on Tuesday for that leg. And look at this. I didn't have a chance to draw this in. But it's such an easy technique. I'm going to be showing you these techniques in 2 weeks' time, and we will have all the information up. But I love teaching these courses. In fact, to show those two lines are so important. Learn how to do them. It says that if you break above that line, there's a real good, let me put the line correctly. If you break above that line in that falling axle, flag pattern, let's call it, you're going to probably take out the previous high. And that's what we're looking at. Let's just for fun see what's happening here. Let me just see. I want you to just go back to the Bank of America chart. There it is. Remember? Hey, Scott, call in more often. Every time you call in, we've got a nice breakout. That's the BAC post. BAC, I said post because Steve Rose is kindly going to post a
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Being a long weekend, there's a chance that no one is there actually to step up to the plate. But I always like to think of this is the day, a typical day in the summer, the end of summer, very quiet. Friday. This is where the chef steers the yacht, has the captain and the crew are joining the owner for a celebration at the beach. No one's there. And wherever the market goes, I usually call this dartfish day, where there's a sudden move and then stops and reverses a little bit, and then another sudden move, just a quick jabs. But that Chapman Wave trend gauge, I think it's telling us that there should be a pretty decent move. So far, the S&P has done it. It's up already. It's already been up 6 points. So in a sense, it's done it. But I would like to see it follow through with the Dow being up at the in the 17,000, at least 120s would be fabulous. So okay, New York Stock Exchange. I had a question there. That needs to go above the high of the 26th of August at 11,054.19. No, it has not made an all-time high. It needs to break above 11,105.85 that was made in the week of the 4th of July. It hasn't done that, but it is making that V-shaped pattern, and that's going to be very important. Now, remember, this is very, very important as well. When you make very low peaks from a D to an E, there are a whole bunch of connotations that apply, and it's exactly what you did here in the New York Stock Exchange. So before we run out of time, I just ran out of time before the break. I'm sorry, my engineer Al talked through into the break. So let's just do this. We want to look at, we've looked at the indices. I'm expecting leg D, and the QQQ, I'm expecting leg C. Oh, there it is. Great. Oh, man, I tell you, I love this. QQQ series in leg C. So now they've caught up. The Qs have caught up to the Dow, which is in leg C. Leg C, waiting for a D. Everything's on plan for next week, so we're going to be watching next week real closely. Just before we wrap up, and then you're going to go to you've got a great show on health, and I'm looking forward to it. And let's see what happens here. Just before I forget, I don't want to lose my train of thought. Yes, so the TLT made a peak C at 119.37, and that was on the 28th. Today's the 29th. 119.37, 119.33, 4 cents lower so far today. I suspect we will get to the D. Whole bunch of things are going on here that makes next week a really important week. And when we are looking at, let me just put this in. Oh, I won't be able to read it. So when I'm looking at bonds, USU 14, bonds, in fact, have gone to a peak C now as well, if there's no new high today. Yep, so they should go to the leg D, and we're going to get a test. Now, the weekly chart is really fascinating. Is this really leg B in the futures contract? Let me go to the continuous. I should have put that in C. I'm sorry, there shouldn't be a B. Let me do this. So before we go to Nico and Paige, we're going to wrap up shortly. And we've got the U.S., so that's B, F/B in the continuous contract. Oh, let me just nail this real quickly. Very important week coming up, because we finally got leg C in the Qs, and that's what we've been waiting for, because you need leg D. We'll see the synchronicity. We're going to see what's happening. When we watch the volatility index, which has pulled back quite sharply. The VIX index right now is at 12.04. Until the VIX starts to really trade back into the 15 to 16 area, I don't think we're going to go down more than just a kind of a short-term pullback. But if that volatility in September breaks into the 20s, this is going to be a very serious decline. That's what you're going to look for. In the meantime, I want to stay long. We'll see what happens next week. Hey, have a wonderful long weekend. Check out my opening call. Go to the front page of TFNN 2 weeks free, and I will. Did I hear the music? Am I beating my own show? No. I'll go for it. There it is. Okay, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.